It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hello there. It's Tyrone Jackson, the wealthy investor, and welcome to episode 223, Corporate Revenue Streams. You know, it's never enough just to say you want to be rich from the stock market. It's never enough to say, oh, those billionaires keep making money over and over. If you want to be rich, you have to learn how the stock market works and functions. And that is exactly what this show is all about. You see, there are a multitude of investment streams and techniques when you want to own stocks, options, futures, or any derivative of a stock, option, or a future, right? It's the people who really understand the core business that really get rich. And another way to say that is the investor who understands revenue streams. So I'm going to talk to you today about revenue streams because, well, I love simplifying and demystifying the stock market so that you understand when you open an online trading account what stocks you're buying and why. If you don't have a clear understanding of what stocks you're buying and why, then there's a higher likelihood you're going to engage in greed and lose not some, but all of your money. You know, from time to time, I hear people saying all the time, the stock market's really complicated and you can lose all your money. And the fact of the matter is, you really can lose every single dollar that you intend on investing and making a fortune. Happens all the time. Why does that happen? Well, when you don't have a financial education and you don't understand the fundamentals behind investing or even trading, for example, it's like playing pool in the dark. You'll hit something for sure, but you won't know why, and you won't be able to duplicate your success. So let's look at a business like, for example, SoFi Stadium in Los Angeles. SoFi Stadium makes its money, or as we say on Wall Street, generates its revenue in a multitude of ways. First of all, the owner benefits from ticket sales. Now, have you ever noticed that ticket sales, if you're there for a baseball or a football game, tend to rise over time? Rarely do professional football games or baseball tickets get cheaper. Why? Because the owner is counting on the demand from that winning team to bring in more revenue, to make more money. Well, if the team is really successful, the owner knows there are about 17 different streams, small and large, that they can count on. For example, do you know how much the owners and these big franchises make just off of the parking? Just off of the parking at the stadium, they know each day they're going to earn anywhere from $10 million to $50 million off the parking. They love when fans get together and do things like tailgating, right? The reason that is not prohibited is because, well, like-minded people always hang out with like-minded people, and there's nothing like meeting other people around a shared interest like a team. So if you're willing to pay those high parking fees at the stadium, yes, you're going to meet people who are just like you, but you're really paying the owner of the stadium in order to do it. Parking fees are another form of revenue that rarely go down. So they know at SoFi Stadium, if they raise their parking fees 5%, 6%, 11%, the market will bear it. Now, what does that mean? It means that people are so happy just to get together, they'll come up with the extra $2 a year, $3 a year, $9 a year. So the parking revenues see a revenue rise, right? How about a little something called concessions? Now, have you ever been to a basketball game or a football game and got hungry or thirsty? Well, they generally won't let you bring in your own refreshments. So therefore, you'll wind up buying a Pepsi-Cola, a Coca-Cola, a hot dog, popcorn, candy, and you're a captive audience. Do you get it? And when you're a captive audience, you'll pay almost any price. Some of us budget how much we're going to actually spend at the concession stands and say, well, I'm not here very often, so, I know I'll spend $150. It's all in the fun of the game. What's another revenue stream that the owner of a franchise team can have? It is merchandising, right? Hats, t-shirts, gloves, photographs. All of those are revenue streams that go in the owner's pocket, the stadium owner's pocket, and then there's the really big money that comes from branding. I love this at baseball games. You can see all of the brands that are displayed around the field, and those brands can pay as much as $5, $10, $15 million a year or per season just to be displayed. Right? So if you can get a winning sports franchise, there are like 7 revenue streams that fall into place that generate millions per weekend off of that winning team. Well, will we ever see the day when a football or baseball or basketball team will become publicly traded? Don't know yet. But I would put money on someday that'll be a reality, or there'll be a company that's put together that buys a piece of all winning franchises and shares in the ticket sales, the merchandising, and then we can buy shares in that publicly traded company that owns 6% of the LA Dodgers, 6% of the New York Knicks. Something like that, because the sports world and the rest of the big money world loves turning to Wall Street with some new innovation that shareholders can participate in. So we see a lot of new vehicles, investment vehicles being invented on Wall Street, but believe you me, it all comes down to revenue and how many revenue streams can be generated. So for example, there's a lot of talk in the media right now about AI, artificial intelligence. Well, we don't all know how that software is going to be utilized, but from a Wall Street investor point of view, if it's not generating 14 different revenue streams, what good is it? It's just something that we like to talk about and get excited about. Now, as I talk to you about revenue streams, you think of your favorite companies like Apple, Disney, Home Depot. How many revenue streams do each one of those companies have? Well, I'll go through that in just a little bit here. Revenue streams also can grow sequentially, quarter by quarter or year over year, right? Okay. So when I'm looking to research a stock, and when you're looking to research a stock and maybe buy 10 shares, 50 shares, or even 1,000 shares, you need to know something about that company's revenue streams. Because sometimes there's one division at the company that's growing 100%, even though the overall revenue may only be growing annually at 5 to 7%. Okay? Why is it you need to understand the revenue streams at your favorite publicly traded company? Because every once in a while, a publicly traded company will sell off one division for like $2, $3, $4, $5 billion. And that division will be bought by another company who can monetize the division that they actually purchased. I know it gets a little involved in here, but if revenue streams are all growing sequentially, they can be sold to outside partners or even licensed in some particular instance so that that publicly traded company can actually benefit to the form of $3, $4, $5 billion off that one sale. Revenue streams are extremely important that you know what they are when it comes to stocks that you're trading and investing in. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey everybody, welcome back. Okay, today we're talking about understanding revenue streams. So let's talk about your favorite stock in the world, which is Apple, ticker symbol AAPL. Apple makes most of its money, its primary revenue, from iPhone sales. That's why every year you see this frenzy around upgrading the iPhone, and everybody wants to get the new one. Behind iPhone sales are iPad sales. So if I'm an investor in the company, I want to know every year how many iPhones you sold, how many iPads, and then how many Macs you actually sold. So over the last 52 weeks, we saw iPhone and iMac sales drop just a little bit. And that doesn't mean that Apple's no longer a good company to invest in. It just means, well, if our economy slows down, less individuals or businesses bought an iPhone. Yes, businesses buy iPhones for their employees, and they also buy Mac computers for their businesses. And every once in a while, those sales will slow. However, those product sales, often referred to as hardware, that hardware can be offset by what is now Apple's cloud division, which they refer to in their income statement as services. So what does that mean? Have you ever been on your iPhone and you've taken a picture and it gets stored in the cloud? Well, that's Apple's cloud. And they tell you, which is kind of brilliant actually, that hey, with all those videos and pictures, you don't want to lose them, right? So we're going to store that in the cloud for you. We're going to link every computer and every Apple device so that what you do, it's all in the cloud. When you lose something, you say, thank you, Apple. But when you don't lose anything at all, you go, yeah, thanks for charging me for all that storage, right? So we've got the hardware and the cloud. And then, of course, their entertainment division, which I think, if I'm correct, is only about 5 to 7% of annual revenue. That would be something like Apple TV. Okay? So Apple is well aware from a revenue point of view where its bread is buttered. By contrast, if you look at Microsoft dominates in the cloud for businesses, or they call it enterprise revenue. But now Microsoft has begun billing you on a monthly basis for what? Their software, their suite of software services like Word, spreadsheets, and on and on and on and on. Because they've discovered that they can make billions of dollars charging the consumer a monthly fee, and yet they tell us it's all in the name of consistency and security until your credit card doesn't go through that month. And then all of a sudden you realize that Microsoft is really about the money, right? So we can't be upset for these companies that come up with new streams. We just have to be aware of what we're participating in and these days what we're paying for and why. So Microsoft's additional revenue stream comes from gaming. Right? Not only the hardware, but also the software. So when you look at a 5-year chart of Microsoft and you notice that the stock has gone up 100% over the last 5 years, and you look at Apple's stock performance 100% over the last 5 years, you know that the stock is not rising out of what we call sentiment. It's not rising because we have feelings about these companies and we like these names. It's rising because investors like you and I understand how the revenue streams, plural, are growing. Now, if we look at a retail stock, and I talk about this company all the time, Macy's, ticker symbol M, which I absolutely love. I grew up shopping at Macy's in New York, and in my young adult life, I love the experience of going in the store. But what's happening? The world has changed, right? So Macy's stock is not in demand because most of us who are buying things online, even high-end fashion, are turning to Amazon. And if we're turning to Amazon, Amazon has become what we call, in terms of streams, ubiquitous. What does that mean? They have so many streams from so many areas, online, entertainment, cloud, that it's hard to keep track of all of them. But we know that the number one way in which Amazon makes its money is from Amazon.com and ordering and drop shipping, right? Yes, but in the top 3 now is the cloud. And who runs on Amazon Cloud? Netflix. Isn't that interesting that almost every major streaming service, all that programming is stored on AWS, which is Amazon's cloud. So If the revenue keeps rising because we haven't really seen the maximum amount of streaming services, there are streaming services being born right now with all sorts of entertainment that you aren't even aware of right now that generates revenue. Well, where is all that content sitting? On AWS. So Amazon has a tremendous amount of running room, meaning over time to sign up more clients, because where do the streaming services get their revenue from? Advertising. Okay? So when you're thinking about some of the favorite names that you like to invest in right now, I want you to think about the revenue streams. Every major publicly traded company has at least 3 revenue streams. To put it in layman's terms, how are they making their money? What are the ways that they do that? Is it more overseas? Is it more domestic in the United States? Every publicly traded company seeks to be multinational around the world because that's how you earn $26 billion, $50 billion, $100 billion per quarter, which then causes your stock price to rise. Now, I hope that this time that we spend together is educational, and it does, in fact, demystify how Wall Street works. So when I come into the studio here and I don't have a guest, I'm always focused on you, your wealth, your consciousness, most importantly, your financial education, so that you can change your life from trading and investing permanently, develop assets, and pass those assets on to others. Well, since it's getting close to Thanksgiving, I ask one thing from you every single year. If you've gained from this knowledge here, either at thewealthyinvestor.net, one of my classes, courses, and you've made money in the stock market successfully this year, I respectfully ask that you take a little bit of that money and help someone else. It doesn't have to be a lot of money, but if you see someone is struggling, do you have $100 in profits that came from the stock market that you can give to them? Can you donate to your local church or nonprofit organization? And the reason I ask you to do this is it comes from the heart. The Wealthy Investor Program is not just about helping ourselves, it's about helping other people. Are you willing to help 1, 2, maybe even 3 people because you listen to the show and you've made a profit? I hope you are. I know I am. With that, I'll see you next week right here on the next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.